Something pretty wild just happened in the financial markets. We saw two assets that, by all logic, should move in opposite directions suddenly shoot up together to record highs. And understanding why that happened, well, it tells a really fascinating story about the world we're living in right now.
It sounds like a riddle, doesn't it? When do the forces of economic fear and the engines of economic optimism point in the exact same direction? I mean, it's a fundamental contradiction. It's not supposed to happen.
So let's break it down. Think of gold as the classic asset of fear, right? When people get nervous about instability or inflation or conflict, they pile into gold. It's a safe place to park their wealth. Copper, though, is the total opposite. It's the asset of growth. You need it for construction, manufacturing, electronics, the whole shebang. When copper prices are up, it means the global economy is firing on all cylinders. They're like the night and day of the commodities market. They just aren't supposed to show up at the same time.
But they did. Gold blasted past $4,400 an ounce, while copper smashed through $12,000 a ton. These are two completely opposite signals, both blinking bright red at the exact same moment. So, what on earth is going on? Well, it turns out it's not just one thing. It's four massive forces all hitting at once. All right, so the first two forces are what you might call the usual suspects. They're the traditional drivers you'd probably expect to see in a rally like this. Easy money and a whole lot of uncertainty. It all kicks off with the U.S. Federal Reserve. They've cut interest rates multiple times now, which means the return you get from super safe stuff like bonds or even just a savings account has basically tanked. So that makes something like gold, which doesn't pay you any interest, look a whole lot better. I mean, why earn practically nothing in the bank when you can hold a real, physical asset instead? And that plugs right into a much bigger worry people have, currency debasement. It's this nagging fear that as central banks keep printing more and more money, the actual value, the purchasing power, of currencies like the US dollar is just going to get worn away over time. To hedge against that, investors are moving out of paper money and into hard, physical assets. And then, of course, you've got the fear factor itself. With geopolitical tensions on the rise, say in South America, for example, there's just this feeling of instability in the air. And in times like these, investors do what they've always done. They run to the safety of gold. And get this, it's not just individuals. Central banks all over the world are snapping up gold at a historic rate, trying to diversify away from the US dollar. Okay, but all of that really only explains why gold is rallying. It doesn't tell us a thing about copper. For that, we've got to look at a third, totally new force, a tidal wave of industrial demand that's unlike anything we have ever seen before. What if I told you that a full 15%, 1/5, of all the demand for copper right now is coming from a sector that barely even made a dent just a few years ago? And that brand new source of demand? It's the AI revolution. The gigantic data centers you need to power artificial intelligence are just incredibly power hungry. They eat up massive amounts of electricity. And guess what you need to move all that power from the grid to the servers? An unbelievable amount of copper. This is the part that's just so fascinating. It creates this direct, physical link between our digital world and the real world. Every single time you type a question into an AI chatbot, that digital action creates a real physical demand for copper from a mine that could be thousands of miles away. The digital and the physical economies have never been this tangled up before. And this new thirst for energy, it isn't just about AI. It also brings silver into the picture. See, silver has the highest electrical conductivity of any element, period. That makes it absolutely essential for the green energy transition. It's a vital piece of the puzzle for solar panels and for electric vehicles, and demand is so insane that for 5 years straight, the world has used more silver than miners have been able to pull out of the ground. So, we've got fear pushing investors into metals, and we've got a massive new wave of industrial demand pulling them up from the other side. But believe it or not, that's still only half the story. The final piece of the puzzle, the thing that turned this rally into an absolute explosion, is a critical supply crunch. The problem is just staring us right in the face. For copper, just when AI demand is taking off like a rocket, you have major mines getting shut down or disrupted. For silver, production has just flatlined. There are no big new mines coming online. So you have demand exploding from every possible angle, while supply just can't keep up. And the final catalyst that just poured gasoline on this fire was government policy. When the US slapped high tariffs on imported copper, it basically sent a massive flare-up to the entire market. This metal is about to get way more expensive and much harder to get. That set off a panic,
a full-on hoarding rush, as companies scrambled to buy up any physical copper they could get their hands on, pushing an already bad supply crisis to its breaking point.
So you have easy money, geopolitical fear, a revolution in AI and energy, and a massive supply squeeze, all happening at the exact same time. It's a true perfect storm. So the obvious question is, where do we go from here? Well, most analysts on Wall Street think this rally still has legs, and why wouldn't it? None of the four huge drivers we just talked about look like they're going away anytime soon. In fact, some forecasts are calling for gold to hit $5,000 an ounce in 2026, as these trends just keep rolling on.
And this is where silver gets really, really interesting. It kind of has this dual identity. It gets to benefit from both sides of this whole story. As a precious metal, it acts like a safe haven, attracting all that fear-driven investment just like gold. But as an industrial metal, it is completely irreplaceable for our future in tech and green energy. Because it's being pulled by both of these incredibly powerful forces, some analysts think silver could actually see even bigger gains than gold, percentage-wise. So what this all means is that the value of these ancient, basic materials is now fundamentally tied to our most advanced, futuristic technologies. The old playbooks for how we value things, they're being rewritten right under our feet. And it leaves us with one last big question. If copper and silver are this critical for the technology of today, what overlooked hidden material out there is going to be the key to the next great innovation? And what's it going to be worth when we finally realize we can't live without it?